Hey everyone, this is Ryan B with Practical Forex Trading. This is your gold versus the US dollar weekly analysis, gold price analysis. The date is March 15th, 2020. If you want to stay up to date with all of our gold analysis videos, make sure you click on that red subscribe button at the bottom right hand corner of your screen. Okay, so we're looking at the weekly chart for gold. Overall, my sentiment is bullish, even though we had a big sell-off last week. What we're looking at here is we can see that price, the weekly candle, closed just above the fast 20-week moving average. Also, I've got outlined here these two blue horizontal lines. So it's right around the $1,400 mark. It kind of stretches down to about $1,375. So this is our support and resistance zone. So make sure you always think about support and resistance as a zone. It's not really a finite number. Sometimes that can get kind of, trick your brain into thinking that maybe price is moving through support, and in fact it's just entering a zone and then will quickly rebound out. So if we think about support and resistance that way, with this rectangle I've outlined, we can see that we've got support essentially between $1,375 and about the $1,500 mark. So price is moving above that, and really when we think about price action, that's the important factor. How does price action close in regards to previous support and resistance, moving average, etc.? So if I go ahead and zoom out, this is when we start looking back all the way to 2005. We see this long low. Oops, let me reframe this. There we go. So basically we're riding on a parallel trend channel. It's multi-year. That's what I'm trying to show with these lines. And now price is moving above it. Now, as you can see, once again, it's not perfect. It's kind of like scribbling. It doesn't always fall between the lines, but you can see that price was in an ascending triangle, kind of popped out, tried to go back in, popped out, rode along the bottom of that. Finally, we see back here in summer of 2019, price moved above into this next little zone. So that you'll notice price action always ends up getting caught in some kind of a triangle at some point. And really the breakthrough moments are short and sweet. But then it kind of falls back into a pattern. So that's what we see here. Price moving. Well, now what might happen, this is a very bearish weekly candle. So in the short term, we may see a dip to the 1475. So let's say look dips to 1475. Because price could continue down here, right? We still might have some more sell-off in the markets the upcoming weeks, with the American economy essentially shutting down for coronavirus. But gold is that long play, so still a lot of potential for gold to continue to its next target. Let's go ahead and look at where those next buys would be, or sorry, next targets. Ultimately, we're shooting for the last high in about 1920, right? That was our previous high all the way back in 2011. As long as gold stays in this large range, we can see it really bounced around this range a couple years back then. We have the potential to revisit the $1,900 mark. Bearish, what turns my sentiment bearish is a close below 1380. So go ahead and mark that out. Close below 1380 is bearish. But we can see prices very far away from that. Doesn't mean it couldn't happen, but the probability is highly unlikely. Even a dip into here would seem like a really good buying opportunity for traders. And remember, that's really who's moving the markets are the traders. I mean, of course, the news does, but it's how people respond to it. So once the fear ebbs off, great buying opportunity. Now, when we look at the timeline down here, this could go in this pocket all the way to the end of the year. So it might take a bit to turn around, but this might be a great buying opportunity. Anyways, everyone have a good week. Stay strong out there. Hope you make lots of profits.